Welcome back, everybody, to 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. It's wonderful to see you all once again as we head into earnings today. Finally, the much awaited, the much anticipated, and really much anticipated, right? So we've been, I think this has been something hinted at, right, going all the way back into December as being an important inflection point for the stock. But we'll be thinking about today to what extent we can expect that going into earnings, coming out of earnings, as well as, I'll be looking at some of the market factors, I think. I have. I'm going to tell you about it. Some of the market factors coming out of, that I'm seeing right here, and why I think it's important for us to take a look at them, because these first couple weeks, right, this kind of last week of March, maybe going into the beginning of February, early February, and then April OPEX, we might be looking at some. We're looking at some things that are sticking out to me as worthy of paying attention. So we're gonna spend some time taking a look at that. So let's take a look at our gratitude. So first off, as always, we thank our monthly contributors. I thank Dat Scruffto, Ken Wedmerlin. Thank you guys so much for supporting the channel on a monthly basis. Ken and Scruffy help offset some of my monthly expenses, some of my monthly data expenses. They've pledged this on a regular basis, so very appreciative for their support as always. Today's newsletter, once again, and every newsletter this week and video is brought to you by Backwoods Degen, Backwoods Degenerate. You are perhaps anything but. So thank you very much for your support, my friend. And as always, thank you to everyone who has contributed in the past, will contribute in the future, who's bought me coffees, including Fervent Coffee Labs and Roasters, Ken and Tabitha out in Colorado. Thank you guys very much. Definitely give Fervent Coffee a try. It's definitely delicious. This Ethiopia roast, notes of blueberry, very good. Enjoying some today, so thank you guys very much. So heading into earnings today, obviously projections have been good. A lot of hype out there, feeling great, right? We had a lot of this hype last week from Sultan Al-Madid, the so-called Sultan of Squeeze. Some ex-users have called this guy. But what about this hype? Like, are we really just gonna rocket into out of earnings, something like that? I don't know, right? I don't know to what extent earnings has to be, really insanely, completely beats expectations. Like, I don't know, maybe if GameStop comes out of the gate and they showed unexpected revenue growth, maybe something like that, we take off. I'm not exactly anticipating, I guess, that revenue growth component, if it stays the same. I mean, profit, yes, right? The company will be more profitable, but kind of what institutions have been using is the excuse not, the excuse not to allow GameStop to kind of take off has been the fact that their revenue is not growing, that the revenue itself has been shrinking, even though the company is becoming more profitable in the process. I think there are a lot of good things that are going to come out of earnings. We talked about this the live stream last week before. Yearly profit's going to be great. We're going to have more cash on hand. Possibly we have some merger acquisitions announcements, maybe elaboration, details on the partnership with PSA, maybe some details, some forward-looking guidance on Nat Turner's role with GameStop. Right? We don't exactly know. And I'm not exactly sure how those factors, even if they should come out, would be, are going to affect the price. Why? Because when it comes to GameStop, right, market sentiment actually doesn't really matter that much, as we've seen. So much of price action concerning GameStop is driven by factors that maybe they pop up on other stocks, but it's so determinant with respect to GameStop. So strategic fails to deliver, targeted shorting in order to control the price, that this is based on certain price levels. It's based on very likely based on swap expiries, things of this sort. Controlling the price with respect to max pain, having a certain hedging volume targeted for after hours or pre-market or overnight, right? All kinds of things factor in to GameStop's price action that seem to be independent of actual buy and demand. The way that the mechanics of this particular stock works, how the mechanics work for GameStop, do not necessarily seem to take into account or do not reflect. See, this is the thing too. It's not that actual supply and demand with respect to the fundamentals of the company is not involved. It is, but with supply and demand, these principles often get sort of broken up, right? These forces get broken up by settlement dynamics and then delayed or pushed out to different parts of the year, which alters the cascade of sentiment to a certain extent, right? It gets all mixed up. So what are we really looking at here, and what can we expect, right? To this extent, this is why I look at a number of the other factors that I look at to try to gain some sort of sense of what might be anticipated coming out of earnings. Now, right, so we'll take a look at some of the contextual factors, which have proven very important over the past few weeks. We do have some factors, right? It's not 100% that we're gonna, it's not completely black box. We have a few factors that suggest, okay, well, maybe we come out of earnings a little bit on the bullish side this week. Not sure, right? We've had a really unexpected lead up in terms of our total trading volume and how IV has behaved. We'll take a look at that, but also looking at some important potential exclamation points there on the broader market. So we're going to go ahead and start there. Love to see this recovery yesterday, as we thought, right? So all that put gex comes off the board. March OPEX, that massive put gex expiry, comes off the board. And what does that do? That unpegs the price, and up we go, right? Go into this call gex dominant regime yesterday, which is more grindy, less volatile. We explained the dynamics of that yesterday in yesterday's video. So go check that out if you want an elaboration on that. Let's see. Okay, so yeah, technically, right, we are seeing some decent bullishness, a little bit of bullish curl here in the momentum indicator on SPY's daily chart. We are kind of at this crossroads here, this inflection point, right? Intersection of the 20-day and the 200-day moving averages. So bit of a hang up here, not sure, right? So this is an inflection point in the sense of, do we get knocked back down and then just kind of dance around in this lower area again? Or do we overcome this and then, continue our trajectory back up to the 50 and the 100-day moving average, right? So that would be around the 590 or the upper 580s area. I think both are possible. It depends how we really come out into this week. It depends how much that tariff concern really matters, right? So the 2nd of April is Trump's tariff deadline. Heading into whether these actual tariffs that were announced several months ago are actually going to come into effect. As we look at options gamma, we can get a sense of how traders are preparing for this type of event. So one thing yesterday that does characterize our overall landscape in SPY has been a repositioning with respect to puts. So we had this really big bullish day yesterday, right, getting up close to 575. Traders decided this was a good opportunity to start opening more long puts. So we do have some negatization, that is shift towards put gamma dominant positions below us. So 570 is now a really big put gamma dominant position. So a lot of puts were opened at 570, not necessarily just for like this week, but heading out for future expiry. So as long as we stay kind of above the 570 area, we get a little bit of volatility ramping up at 571, a little bit at 572. We kind of have to stay in this upper range, kind of keep grinding higher, kind of running away as traders kind of insert puts behind us. So as long as we keep moving up, as long as we keep grinding up and staying up and not sort of retracing our steps down to the nearest kind of whole dollar or below the nearest kind of whole $5 interval, then we'll stay stable. And if we look at what the next couple days look like based on expiries, right, we do see that heading into, it looks like maybe a little bit of preparation for a little bit of retrace today, maybe, right, slightly skewed in terms of put gex for today's trading. What is good to see, though, is we do have this week, the outlook overall on this week, based on what we're seeing, is skewed towards calls. So net call gamma exposure means heading into the end of this week, we're looking at less volatile conditions typically, right? Unless we get some sort of catalyst. Now, weirdly, and I pointed this out before, I pointed this out yesterday, 331 is a weirdly put gex heavy day. It's the last day of the month. Okay. I'm not exactly sure why the last day of the month would be put gex dominant, aside from the fact that this is, well, we have a decent size, I guess, call gex expiry here on the 28th. Then we're going to move into April. We have the tariff deadline coming up on the 2nd. And the 31st is also a very big roll day, actually, for GameStop, right? A swap roll day. There are a lot of swaps expiring on the 31st. That's likely true not only for GameStop. So is it possible that because this is a big swap expiry date that some sort of price adjustment is anticipated? That's a lot of gex to have. 11% of our total net put gex is on the 31st, and that's a daily expiry, and that was the case even yesterday. So that doesn't look to have expanded much, but what has expanded a lot is put gex for April 17th. So it's not quite as bearish as we were heading into March OPEX, but it is indicative of some concern for potential downside in early April. So it may not be that there is anticipation that the market will move down into 417 OPEX. This may be something opened as sort of an uncertainty cushion, so that a move, if it should result from the tariff episode into the first week or the second week of April, that there is some time for that move to kind of play out, and positions around the 17th OPEX would be able to capture a move of that size, even if it doesn't mean that we just continue to drop for 3 straight weeks or something like that into April OPEX. So little bit concerning there. We don't necessarily have much optimism too far out. So this basically says, like, yeah, that tariff thing is what's causing a little bit of uncertainty. Doesn't necessarily forecast that we just absolutely fall through even our support on this March dip. Maybe we do see a little bit of downside retracement there. But we're going to need to see this kind of get out of the way, I think, if we want to see bigger recovery to the upside play out throughout the rest of the quarter. We have to see. Now, what does that matter for GameStop? Well, as we've said, we've talked about this a number of times. If the market is going down, ETFs are selling off some of their positions. They're rebalancing. It's easier to short ETFs because they're losing value. Under these conditions, their prices are going down. If you're shorting the ETF, you can accelerate certain stocks' deceleration to the downside. You can use ETF manipulation, creation, redemption, this sort of thing. It's easier for you to open up these positions and to fail to deliver shares of these ETFs because the ETF's price is moving down. So, it's effectively like a short, right? You can go out. So, okay, you fail to deliver now. You go pick up the actual share for whatever settlement purposes you need. Down in the future, the ETF is moving down in price. So you're actually making money by doing that, right? So that's not negatively affecting your margin balance. That's actually helping your margin balance to a certain extent there. So that makes it a little easier on institutions that want to transpose GameStop's price downward. So bigger bearish, right? When we've seen kind of stable or sideways conditions, not as much the case. Obviously, when we see bullish recovery like we've seen, we see some bullish. Sometimes right now we're seeing some bullish recovery in GameStop, but sort of less downside vulnerability. If we see this continue to play out, right? If we see indeed some of this volatility realized to the downside, GameStop will be under, at least for this period, again, under that type of vulnerability that we saw play out. Hopefully not as strongly to the downside, but we'll be vulnerable to that sort of activity that we saw take place in later February and for most of the beginning of March. So we'll see, but it's important to point this out to sort of temper expectations dependent. I mean, if we really come out of earnings and it's like, whoa, and the market takes really well, and we shoot up to $30 or something, which I think is an outlier case. Then maybe when things get bearish, we kind of just move back to 25 or 23 or something like that, right? In fact, I mean, in the short term, options buyers are particularly bullish on GameStop going into this expiry, right? So IV levels are pretty low based on our recent price action. I mean, if this were not an earnings period, I'd be a little bit, well, we'd be looking at something like pretty close to historic, right? So pretty close to 52-week IV lows heading into April and May. So this would be maybe some interesting opportunities for maybe an IV related options play, long call play, something like that, right? Like I said, not trade advice. I always like to go in the money. I always like to go far out. I like to not super duper play IV if I don't have to, and I don't have to. You don't have to. You don't have to play it. So, but that can be right. That can be another factor, right? If IV is really really low, you can advantage yourself a little bit more in that type of trade by targeting an IV low, because the probability is it's going to reverse back to the upside. So you'll have a little bit of that will factor into the appreciation of your contract. So not sure, but maybe there are indeed some traders playing that. What's been very interesting to me has been, the degree to which in the short term traders have actually targeted in chunks short put trades, right? So yesterday, obviously taking a look, we look at just sort of the raw data, see puts are going up, what's going on, are people taking downside protection? Like, for example, going into Q3 earnings, we did see a lot of long put trades open. It really looked like GameStop was going to move to the downside, and it didn't. So there were a lot of long put trades that were open then. What's really interesting here is the degree to which traders have opened short put trades in big blocks, right? So big block here of 3,500, right? 3,500 short puts at $23. Big block here of about 1,000, 800 to 1,000. Short puts over at $25. Right, another skew here. 2,000 or so opened at around 2,000, right near the close yesterday at 25.50. An unusual strike to see that kind of volume. And at 20, we even saw 20. We saw a solid block, almost 1,000 opened at 20 puts. So puts, by and large, when we saw this IB expansion, or I shouldn't say IB, I should say OI expansion here on the put side of things, it's bullish. So traders are bullish on the put side of things, actually going into earnings. And these two call strikes as well, these outside strikes at 27 and 28, these were bullish. These were skewed towards the ask. So traders in the short term yesterday, pretty bullish on GameStop. Okay, does that necessarily mean that's going to be the case coming out of 328? No, not necessarily, right? And we do kind of see that optimism in the broader market disappearing after 328. We did see another interesting play I wanted to call out. Some trader, now this one, please be careful with this. Please do not think this is trade advice. This is a very, very dangerous contract to be holding. This is a $125 call for June. Okay, so this is an IV play in the sense that if there is some sort of major IV event that occurs, if volume picks up following earnings, right? If we all of a sudden shoot up to, if we have a day of like 20 million volume or something, these could go up a bit, right? These could appreciate by 50% or 100% or something like that. If we see a really big volume day intraday, this is a major hot potato, right? Because these will lose value. I mean, I suppose, these are so far out of the money. These will really lose value soon. They're probably already, to a certain extent, being held up by some earnings IV. The June IV, for some reason, is elevated versus some of our other strikes, right? So you see, okay, in the near term, March 28th, very high, right? Very high. That's reflecting earnings uncertainty right there. That's options right now, priced very high. These are going to get crushed regardless of our price action, unless price action goes utterly nuts. um, things are going to get crushed here. Okay. 4 April, also very high. Those are going to take a hit. 11 April, also very decently high. Those are going to take a hit. 17, a little less. After 17 April, we have a pocket of super low IV, very low IV on these. And then after June, right after June, we have, did I get that right? Yeah, after June, July, low, October, mega low, Jan 26, right? A little bit higher. And then 15, 27, also on the low side. But right, lower, but June sticks out because June, weirdly, June has IV levels basically like this mid-April cluster. Strange. Not sure why. Maybe it's possible that there is some sort of effect there, given the chance that something outsized occurs on GameStop, right? And the reason I say don't go trade this is because like this thing can lose a ton of value instantly, right? This trader decided to go in and drop like 70K, 68K or something on this trade here. 63, sorry, almost $64,000. But right, you don't know if this is like $100 million account. That's just like, what the hell? Let's go for it, right? But just pointing this out. Just pointing this out. It was exactly when the stock price was 25.50. Got the mid on this. It was a tight bid-ask spread. So that's another reason why this is probably a popular contract. It's a tight bid-ask spread. It's very highly tied to IV. But this is probably, I would not be surprised if this trader waited like a day or 2 days just to see what happens after earnings. And if this trader doesn't get the move that he's looking for, he's just done with this. Very difficult, very sensitive to IV. Will lose a lot of value really quickly, especially if it's subject to IV crush from earnings. Not exactly sure if that's going to be the case, but I would not trade. Like, this is not something I'm going to trade. I mean, maybe if I got like $100, and that's like 0.00 for me, like what is $100 in my portfolio? That's like 0.0001% of like what I'm dealing with, right? Right. So let me just do the math. No, 0.00, yeah, 0.001, 0.001, something like that, right? It's low. A penny on the ground that maybe I wouldn't pick up, something like that as in terms of a trade, in terms of potential loss. Hold it for a day or two or something like that. But anyway, just pointing this out because some trader is taking a gander on this. This is an atypical trade to call out. And maybe there is some funky IV dynamic that comes out of what we're looking at in earnings today. Max Payne still, though, at 24, despite all this very interesting activity. 24 for this week, 25 for next week. I mean, interesting, right, to see that Max Payne hasn't shifted too much. Weirdly, we don't have a lot of OI for the 4th of April. Numbers for this week look normal. April 17 is big. It's also at 24. So, I mean, these Max Payne values are good, right? This doesn't suggest that, we're going to 21 or 20 or, even below or something like that. That's not suggested there. And I think too, right? So we talked yesterday that the swaps for the 31st, the swaps for the 28th are in trouble, right? Because those are very deep underwater. Any of those are short swaps, right? Those were open when GameStop's price was between like $13 and $16. So who's ever got those open either needs to close with a big loss or just continue to eat terrible premiums as things get worse for them. The 31st, though, I mean, not awful, right? Those are kind of priced in the $22 to $24 mark. So we're slightly above that. So if we trade off after earnings, it may not be like a crazy deep dig, even if we get this kind of this contextual bearishness in the broader market, something like that. So definitely good to be wary of this. IV's been weird heading into this. We do have some signs that, right, kind of even out to May, right, we're kind of looking at stability here in these price ranges. Nothing is saying right now, I would say, in terms of our technicals or momentum or anything like that that is really forecasting like, okay, we're going to take off right now. Maybe we get a shorter term something in terms of IV that gets then moved back down. I'm very wary of what's going on with swaps. I'm very wary of what I'm seeing in the broader market. Do I think that's necessarily like doom and gloom for GameStop? No, I don't. But I'm also tempering expectations heading into earnings, and I would love to be surprised with respect to our price action. Right? I understand that, you know, regardless of almost regardless of how well GameStop does, like I'll be very excited to see what comes out of our annual earnings, on the understanding that that's something that even if it's really good, institutions are probably waiting. I don't know. They're going to try to kick some of that so that we see some of that goodness pop up a month or 2 months from now when these settlement dynamics sort of get tied off. So yeah, so we'll see. Very excited to see what comes out of earnings today. You know, I'm sure you'll hear from me if you guys follow me on X. You know, I'll probably post reactions or something like that. I'll be watching things closely intraday. So it'll be yeah, it'll be an interesting day. So thanks very much as always for watching and listening. Look forward to seeing you guys. Thanks so much for your remarks down in the comments. Everybody was super active yesterday, which I loved. Yeah, I love getting questions, comments, concerns, anything like that down in the comments. So thank you very much, you guys. Yeah, and look forward to seeing you. Look forward to seeing you tomorrow when we will be, a new company. We'll be dealing with a new fundamental environment for the company. So, yeah, let's go GameStop. We'll see you guys next time.